Hi friends, I hope you are doing great. So in this video, I am planning to make a new series on one of the important concept, and that is technical indicators. So most of the beginners feel that using technical indicators is a difficult job, okay? And at the same time, some of the traders and investors say that technical indicators are not required to become successful in the market, okay? But let me tell you friends, when you know how to use the technical indicators, I think definitely it can add a great value in your analysis process. And I strongly believe that when your analysis is based on the fundamental factors, and when you analyze the market using these technical indicators, then your decision will have a higher probability of success. Okay, so when we have this kind of advantage, then let us put some effort in understanding these technical indicators so that we can make our decision a more reliable. All right, so let's get started. So friends, before we discuss about the technical indicators, let us try to understand some basic terminologies. All right, so here we might have heard in market that the stock is in uptrend, the stock is in downtrend, these kind of terminologies, right? But let's try to understand in detail about the possible trends that a market can have. So friends, if you see here, the first scenario that I have taken is the uptrend part. So initially the market is in uptrend and then it moved sideways. So before continuing another upward rally, the market was in sideways for some period of time. Okay, so this is what it can happen. So most of the times when the market is in uptrend, we usually see that before continuing the upward rally, usually the market moves in a sideways for some period of time and then it continues towards upside. All right. So this is one possible scenario. And the second possible scenario is the stock is moving towards upside and again it has moved sideways for some period of time. And then what can happen, friends? There is a drastic fall in the market. Okay. So this we say that it is a correction or crash in the market. Okay. So in this scenario, one has to be stay alert if the market is forming a new lows again and again. All right. So if it is a slight correction, we'll see a slight fall. But again, if it is a crash, one can look into new opportunities. And the other scenario is as the market is in uptrend previously, and then if you can see there are many stocks which has traded in sideways market for very long period of time. Okay, you might think it could be weeks, months, or even in years. There are some stocks in the market where it trades in the sideways for a very long period of time. Let's suppose when we buy the stock looking at this uptrend, and if the stock stays in the sideways for a long period of time, so will not be in a profit zone or in loss zone, right? And again, ultimately, it is of no use. So these are some of the possible trends that can happen in the market, as we have taken the a prior trend is a uptrend. All right. Now let us look at the another scenario where the prior trend is a downtrend. Okay. So here again, if you see when the market is in downtrend, we see some sideways while it is falling, and again before continuing its downtrend, sometimes market stays in sideways for some period of time. All right. So this is one possible trend that can happen in the market. And let's look at the another possible scenario when the market is falling and the market moves in sideways for some period of time, and then if you see there is a trend reversal in the market and it continued upside, right? So this we say as change in the trend. Okay, so earlier it was a downtrend and then after sideways there is a upward rally, so this is called change in the trend or a reversal in the market. All right. And the another scenario is when the market is falling and again you can see that the market can move into sideways again for a long period of time. All right. So there is no downtrend or the uptrend. Okay. So this sideways market also are difficult for investors, especially because it is not moving upside, right? Only when the market goes upside you make money, otherwise we will not, correct? So even sideways market is also no use. So we have seen all the possible scenarios when the market is in uptrend and when the market is in downtrend. And I hope you understood the meaning of a correction, market crash, and the reversal in market, change in the trend, all these. All right. So friends, the ultimate goal for any market participant is to make money, correct? So what we need to make money in market, you should be able to predict the a future movement of market, correct? To achieve this purpose, if there is any instrument which can gives some signal for you where you can look for opportunities, don't you think it is exciting? Definitely yes, right? So, and this is what a technical indicator does for us, friends. Okay, so these technical indicators makes our life more easy in understanding the market and in looking for the opportunities. All right, so as we were saying that technical indicator helps us in prediction of the future movement, right? Now I hope you definitely get a question in your mind that how technical indicators can generate a signal about the future movement. So I just want to give you a simple analogy here so that it will be very easy for you to understand. Okay. So friends, if I ask you to predict whether there is going to be a rain today or not, okay, so what you gonna do? You will take certain parameters into consideration and then you will predict whether it's going to be rain or not, correct? You may calculate the current temperature in the place, right? And also if you see the dark clouds, then you can say that yeah, there is a probability of rain today, correct? And also you will see the humidity levels and the wind speed. So taking all these parameters into consideration, you will come with an analysis saying that there might be a rain or there might not be rain today, right? So here also the technical indicators take certain parameters into consideration and then it predict the future movement of a market. Every technical indicator has its own formula which takes the price data as an input or the volume data, and then it performs a mathematical operation and it generates a signal. That is how a technical indicator works upon. Okay, so it is all about probability, friends. Okay, even after you see the satisfying numbers on all these parameters, but still you may not assure that it is going to be definitely rain today, right? It could be dark cloud, or if the temperature is low and the wind speed is very high, but still your decision may go wrong, correct? It's all about the probability. The same thing even applies with technical indicators. So I hope you understood now how the technical indicators operates and helps us in prediction of a future movement of market. Okay, so let us discuss some of the important points regarding the technical indicators. Okay, if I want to define in simple words what is actually a technical indicator, it is just a mathematically derived representation of price, volume, etc. As I said, each technical indicator has its own formula, okay, which takes the input as the price data or the volume data, and then it generates the signal. So when we discuss about each indicator separately, then you will be able to understand very clearly how it works and how can you use that. Okay. So ultimately, friends, what is the objective of any technical indicator? It should helps us in forecasting the price movement of security and the sentiment behind it. This is also the one of the important thing that we would concentrate on. Okay, so not just the price movement, but also the sentiment behind that. And the another important question that gets into your mind is what type of technical indicators do we have? Okay, so friends, broadly we can categorize technical indicators into two types. One is leading indicator and another is lagging indicator. So first let me tell you what is leading indicator. An indicator which gives a signal before the occurrence of change in trend. Like for example RSI, stochastic, so all these indicators you might have heard. So these indicators use shorter time period data in its calculation and it generates the signal. Okay. So friends, you should keep this important point in your mind. It says that it generates the signal before the occurrence of change in trend. So this is what we need, right? Before the occurrence of any change in the trend, if we were able to identify it, then only you can plan your trade. But friends, since the leading indicators use shorter time period data, there is a high probability that even it gives a false signal. Okay, so never ever we should rely on only the leading indicators in your trading system. So along with the leading indicators, we should use other type of indicators so that the signal could be more reliable. And let us look at the other type of indicators. and that is a lagging indicator. So these type of indicator usually gives the signal after the occurrence of change in trend. Like for example, moving average, MACD, all these indicators generates the signal after the occurrence of change in trend. So you might think, okay, what is the use if the indicator is giving signal after the change in trend, correct? But let me tell you friends, these lagging indicators also helps us in confirming the change in trend. So this point you can keep in your mind that it gives a confirmation, all right? So I hope you understood what a leading indicator do and what a lagging indicator do. Now we have broadly understood about these two types of indicators. Now let us try to understand what are the limitations when we are using these indicators. So far we have discussed what things it can do, but let us also try to understand the limitations in it so that we'll be more cautious, correct? The first important thing is delayed signals. As we have discussed lagging indicators for suppose, as it gives the signal after the occurrence of change in trend, correct? So in that case, you might miss the opportunities before occurred, correct? So again, friends, as the lagging indicators, it confirms the change in trend. Okay, that confirmation we will get using lagging indicators. Okay, and the second important thing is accuracy. So one of the most important thing, friends, you should never have a perception saying that if you know about technical indicators, you can become a successful trader. That can never happen. Let's suppose if there is any indicator which gives 100% accurate signals, don't you think that everybody can become rich in market? So we should be more cautious in terms of accuracy because there is no indicator which gives 100% accurate results. It's all about probability. It's all about the market conditions. Okay, so you need to consider other factors into consideration while using technical indicators and especially in your analysis process. Okay, let's suppose if I want to give you some example, in the recent days we might have noticed that there is a war between Russia and Ukraine. Okay, so do you think friends this technical indicators plays a role in making your decision? No, right? Because the news dominates here the technical indicators, right? The news has more strength in changing the price movement in the market, correct? So that is the reason never ever rely completely on the technical indicators, but yeah, it can definitely add some value to your analysis. And the third most important thing is mixed signals. So friends, let's suppose you are using three same leading indicators in your chart analysis and then you are making your decision. So what happens is when you are using multiple indicators, one indicator gives buy signal, another indicator gives a sell signal. So it gives some mixed signals. There you get into a confusion state, and that is where your decisions might go wrong. Correct? So always focus on the important technical indicators and know how to use them appropriately. Then you will be able to make a better decision. Okay? I hope this video helps you to understand the importance of technical indicators and how you should look at them and the types of indicators that we have and the limitations while using them. Okay, so in the next couple of videos I'll be making a separate video on each technical indicator, so it helps you to understand in detail and how to use them. All right friends, stay tuned. Thank you.